This is Sandra with Trading Made Simple. I'm here to show you short-term proven strategies. People think trading is a one-size-fit-all market. It's not. We live trade and train daily. Let's talk trading. Looking at SPX right now, and SPX we hit some resistance yesterday and woke up this morning with a little bit of a gap down. You can see that gap right here. Really looking to see if we get a little pop. I think that most of the week really has had this pattern where we're really going absolutely nowhere. And then all of a sudden we rise, and you can see it here on a 15-minute chart where we're just going sideways and all of a sudden we just start to crank up. Looks like we may have hit a resistance here. As you can see, we have a Darvis consolidation band that's been here for a couple weeks, just trading within this range. We actually popped it on yesterday, and today we're breaking down below it. So typically speaking, when we pop up the consolidation band, it really means that there's some momentum and flow there. And then we tend to go a little higher, but you can see that our increments have been small. And so as we have been trading in this range, that's high yesterday, where is that? 65.08. And now you can see that we're down about 48 points today. So momentum actually still positive, but heading on the low, heading towards the zero line. If we break below that zero line, then we could possibly see a trend change. Don't know if that's in the cards. Don't know if this is going to be a buy the dip. We'll have to see on Tuesday. You can see that we talk about the over, high, and low. Let's talk about that real quick as a range. So you can see on SPX, the overnight range, and with the low, the mid and high is. So typically speaking, whatever happens overnight, right? The high and the low overnight tend to be a really good range to follow in the morning, because when the market opens, if we break above the pre-market highs, then we're actually trending bullish. If we break below the pre-market lows, then we are trending bearish. If we stay within that range all day, then it's an inside day. It's a range day. And so this is a real easy way for you to keep track of what the market's doing, as well as to see if we're going to have a trending day. So right now we're having a bearish trending day. We broke below the pre-market low, and you can see that we have a little recovery here on a 1 hour. But if we take it to a 15, let's see here, you can see that we broke down, consolidated, and we'll have to see if we retest it, break down, or if we start to pop back above that 20, right? Are we going to get anywhere near this gap, right? We gap down today, and typically speaking, we do end up oftentimes flirting with filling a gap. It looks really weak today, guys, but we'll have to see a little bit later if we get a little pump. We've been consolidating for quite a while here. It looks like since 10:05, I'm Pacific Standard Time. And funny story this morning, I woke up late and I was in a panic. I'm sure you traders out there know exactly what I'm talking about. And that's one of the reasons why I learned how to automate my trade, basically using the platform of ThinkorSwim. And it's really nice to be able to actually sleep in and not worry about your trades when they're automated. You have your stop loss, you have your profit taking already set. You can set it and forget it. So today it reminded me of that as I woke up in a panic, like, oh no, what's going on? And it doesn't matter what's going on. I have everything set. So I'm going to be okay. If you want to learn how to automate your trades, you can come visit us over at tradingmadesimple.org. Outside of that, let's take a look at QQQ. QQQ looking exactly the same as SPX, right? A gap down, as you can see the gap. Then we're consolidating, and we're consolidating within these bands. Could you look at a consolidation band? And I'm sure you probably have something on your chart. If you don't, reach out to me at Sandra@tradingmadesimple.org. We'll get you this indicator, but it's really nice on any time frame to see where the consolidation is. Why can that help you? The market tends to trend, 30-40% of the time, but it actually is in consolidation the rest of the time. So if you're a trader just sitting in front of your computer all day, waiting for something to happen, some trend to happen, right? This could really help you because it can identify those consolidation areas. You could set up an automated trade, hint, and then you could go about your day. And how would you do that? As an example, on the Qs, you would just look over at the consolidation band and say, okay, 570.92. Can you guys see this gray band as I hover over the consolidation area? 570.92 thereabouts. You can make it 570.95 just to have a little bit more padding to the upside, right? Because we're wanting some momentum. Oftentimes when the market just goes sideways and is real slow, doesn't have a lot of volume, doesn't have a lot of momentum or juice, it'll tag you and then it'll come right back down. Kind of like what we did here and what we did here. So that is the reason where, as an automator, I really like to pad my trades so that we can see the actual break of this level. So as I look at 570.93 as an example, I'm going to say, hey, look, let's do 571. At 571, I want to take a long call. How would we go about that, guys? Let's just go do it as an exercise. We said 571 on the cues. Let's show you how to do that right now. So as we're on the trade tab, let's take September 2nd. And I've been doing a lot of butterflies for these consolidation areas, but let's take a look at just taking a long call when price gets above that 571. Now I was looking at price right on a 5 minute. So technically speaking, that would be a short little day trade. If I wanted to do this on an hourly, which is really nice, right? I could then take a look here and you can see that our previous consolidation was right about here when we broke through that. If we get back into this previous consolidation area, we could then use this as a range again, right? And you'll notice that that's actually very close to our inside range of today. So you can even use, and this is really good to know because a lot of people really think that all of these indicate it needs to be a finite line of support and resistance. And really, support and resistance is not a finite line because it's really a zone, and price action is dynamic and tends to move. It's a marketplace. And so what ends up happening is people will get out right at where that line's at. And really, it may go a couple cents and then pop right back up. And so you really want to take consideration that when you are thinking about your support and resistance, that you recognize that it's a zone. So as I look at, as an example, our pre-market low today, and I see that it's at 571.16, on a 5 minute chart, that 571 looked pretty good. But now that I look and see that, hey, on an hourly, that's our pre-market low, I may want to say 171.50, right, for a call. 571.50. Can somebody remember that so that I could get over here and program it? So let's do it. We could just take an at the money. You can either take an at the money or you can take where your target price is going to be. As you could see for at the money, we're going to just right click it anywhere and say buy custom. And when we do a buy custom with a bracket, what that really means is it's going to give you your buy order and then it's going to give you 2 sell orders. Now those 2 sell orders, one is for your profit taking and the other is for your stop loss. So you always should have your risk in place. Always risk number one, conserve capital. So the first thing we want to do is program that order to say, hey, Sandy said if it hits above that 571.50, I want to go for a long call because every afternoon we seem to be popping up a little bit. Now, granted, we're down today on the Q 1.2%. The rest of the week, we've just been going sideways, really haven't gapped down. So we do have a bearish trending day. Doesn't mean we're not going to do a reversion to the mean trade, right? And that's what this kind of is. So right over here, you're going to see some shaded boxes. So these shaded boxes, when you hover your mouse over, you would never know that they were there unless you did that. So as you hover over the shaded box, you're just going to click on it. When you click on it, it automatically puts in the ticker that you were looking at on your trade tab. When you click method, it defaults to mark, and we're going to leave it at mark. When we go to trigger, this is the first one is below or equal to. The second one is above or equal to. If you ever get lost on the trigger, which I know I did as well, you're just going to go down here and you can actually see it in action. So if I say, hey, I want to go above, and you can see automatically it says greater or equal to, now you could go ahead and stick your stock price in here. So we're going to say 571.50 like we talked about. And this is because we've been in consult for most of the morning. So now that I have my condition set, whenever we go to the order rules form, we really want to make sure that we're doing the bottom half of the order form. That's the most important for us as we dive into our programming. Okay. Now, because we're using a stock price to trigger our entry into this trade, we're not using an option price. If you leave the top half now like this, you're just going to get basically an error message. It'll probably let you go ahead and send the trade through. But unfortunately, as soon as 571.50 hits, the whole thing will shut itself down. So you want to make sure that here we're going to say, okay, if we're going to get into a trade when this triggers at 571.50, what is the option price going to be? Because we don't really know, right, at this point. Right now, the option price is 232 right now at 570.30, but we don't know what it's going to be at 571 when it turns 571.50. But we're going to just be like aggressive buyers. You could put this at mark. And let me tell you what the difference is in between this entire drop-down menu. I'm going to just show you the important ones. If you do mark, this basically means in between the bid and the ask at the time. Now, typically speaking, more often than not, you'll get filled. The only problem is there's no guarantee on it, right? We all know that a market order is a guaranteed order, but mark is not. Now, if you put this at by the ask, that just means that you're a buyer on the aggressive side. And when you're dealing with a very liquid ETF like QQ, you know that there's a very narrow spread, maybe 1 cent, maybe nothing. And we'll show you what it is in just a second here. So let's say that this is a day trade. If this doesn't happen today, I want the trade to evaporate. If I wanted this to continue also until Monday, I would hit good till cancel, right? So we're going to leave this on as a day trade to see if this actually triggers. And what do I want it to trigger? I want it to trigger Q above or equal to 571.50 for me to get into a long call. And that's how simple that is. And now we save it. So now that's saved, we're going to now concentrate on our take profit and our stop loss. So let's get to it. The first one we're going to do is our take profit. So as we look at our take profit, we're like, okay, do you have something in mind? 25% as an example is really easy template to just type, just remember a 25% profit, a 25% stop loss, and the trade is done. I created a template which you can do so that you can use it over and over again so that it's real easy to pop up your trades like this and go about your day. So the thing is though, as you take a look at the chart, if you want to do more analysis, if you want to look at ATR, etc., or you could just stick it in and say, hey, I just want to do a percentage. If that's the deal, what you're going to do is you're going to come over where it says man for Manuel, and you're going to go over here and say trigger, right? So you're triggering what? So first you have the plus and the minus, and it has $1 here. So this is, considered the dollar price, right? This is if you wanted to place a price for the stock and say, okay, when our order gets to $1 as an example of profit, get me out. But I'm going to do an easier one here, which is just a percentage. And now here you could go ahead and either change it by using these toggles, and you'll see these switches are really small, but you can toggle up and down, or you could just type it in. So let's just go for an easy 20%. And then here we're going to do a stop loss. Again, you're going to hit trigger. And by the way, these can be different. They don't need to be the same. So you could use $1 as an example, or you could say, you know what, let me do a different one on this one. Instead of a percentage, how about if I use the money wise and say, you know what, if this turns around, not in $1, okay, but if this turns around in, let's say, 25 cents, then I want to exit this trade. Okay, so if this thing has some momentum this afternoon and takes me through that consolidation area of 571.50, keep the trade going. Or if it makes a U-turn, if it gets me in and makes a U-turn and goes down 25 cents, I'm just out of the trade. And then now we're limiting our risk. We're making it really small. Now here's where you put your contract size on. You can use this drop-down menu as an example. You can use 10 contracts. If you use 10 contracts for that buy order, then you got to make sure that your sell orders match or your programming's not right. So we'll just keep it at 1 because this is just an example trade. And then now we have basically, hey, get me into this trade, get me out of this trade at 20% profit. And then I want to stop if it drops down 25 cents. These are all on day. And now we have basically a call order. And you can see that on our order form. It basically, you always want to read this form, by the way, if you guys are an automator, because it really tells you what you just programmed in. So here's the Qs at or above 571.50. You're saying, hey, buy a call when that happens. And then sell those Qs when you hit a 20% profit or a minus 25 cent. It says 0.25, not $25, 0.25 cent to get me out. I could be wrong on this. I'm risking just a little bit.
maybe I just want to do a day trade on here, etc. So this is how you would typically do this. And this is for a Monday expiration. So we have some time. I'm in the wrong account. Let's see if I return to the order, go to my correct one, submit it now. And this is going to go through. It's waiting in the wings. So now this is basically a waiting, right? It's waiting for, let's go over here. It's waiting for, if you go into the working orders, you can see the queues are waiting. And what's it waiting for? If you click on the gear icon, you can see that it's waiting for the programming. It's waiting for 571.50 to actually happen. Once it does, then these two orders will be waiting. What are they waiting for? They're waiting for either my profit or loss to happen. And whenever one gets triggered, the profit one or the loss one, then the other one will just evaporate in the system so you don't have to worry about it. So this is a really clean way that you can get yourself into an automated order and do it relatively quickly and create a game plan when you're actually looking at the chart. How many times, and by the way, when we look at the chart, you can see our orders right here. How many times have you looked at a chart, you're doing all of your analysis and you do absolutely nothing about it? This really allows you to use your time more efficiently, right? You're doing the analysis, you're saying, hey, this is the pre-market low. An hourly is a great time frame to use. If we break above that pre-market low, we may end up going to the mid, right? Or maybe the opening price. So with that in mind, I want to maybe see if we have this is a reversion to the mean trade, isn't it? Now, if I wanted to do a continuation of a put trade, how would I do that? You could look at your chart as an example. I always like a 1 hour 15. If it was a little day trade, you could do that. But as we look at a 15, you could see that we have a nice consolidation band right here at 568.96. You could see that we came down and we just been at that price, haven't really broken it. So if I look at 568.96 and I wanted to pad that just a little bit, right? I could say, okay, at 568.80 as an example, I can do a put trade. And you're going to enter that trade just like we did. In fact, let's just do it right now, guys. So what did I say? This is going to be a 568.80. 568.80, we're going for a put. Let's go over to the trade tab. We could take the 568 right here. Okay, this contract. We're just going to buy it, click it, do the buy custom on this with an OCO bracket that pops up. By the way, you guys could make templates on here, make it real simple for you. And so now as I go into my gear icon, which is for programming, we're going to focus on the bottom and we're going to do this like really quick now, right? So this one is less than or equal to, and this is a put trade. So we're looking at 568.80, I believe it was. I'll save it and then take a look. And remember, we're buying options. So we want to be aggressive about it. You could go ahead and use the mark, but if it doesn't fill, don't get upset. It's just because it's not a guarantee entry. Ask is a higher level of a guarantee that you'll be entered. And then market that's one on the list, right? Ask is the second on the list and mark is the third on the list. How aggressive do you want to be to get into this trade? The thinner the spread, right? The higher up on the chain you can go without much ramification, right? The wider the spread, standby to standby, if you're going to be doing like a mark order, an ask order, you're going to be paying a lot for, or a market order, you can be paying a lot for. That's why in our group, we don't, anything that's illiquid that has wide spreads, we just don't trade. It's just not worth it for us, not even for automators, right? Or even as a manual trader, I never trade wide spread tickers. So now that we have buy the ask, this is for the day, 568.80. You can see our programming here. And by the way, do you see how it says 00? This is great training right here. Just put your cursor in the box and tab out of it. And once you tab out of it, now you got your programming set, right? Because that's what you're doing, is you're just becoming a programmer. The nice thing is you don't have to buy a third-party software. It's right here in your platform. So we have, and you see how I have less than or equal to 568.80. Great. I just want to take a look at the chart really quick to make sure that was the price. Yes, it was. Is that right? 568? Yes, it was. Okay. So back to the trade tab. And now we're going to do our profit and loss. Now on this one's interesting. You know what I'd like to do on this one? I'm going to show you, I'm going to get rid of one of these orders. I'm going to say delete this order and I'm going to pop right back up here. And for this one now, what I'm going to do is I'm going to put a trigger and I'm going to put a trail stop, and then I'm going to describe what this is. So on this trail stop, I'm going to put a negative. Let's do it by percentage, and we'll do negative 25%. By the way, 25% I've noted these days in automation for volatility has been working pretty decently. We're creating a backtesting system where we can actually analyze with different variables. Is it better when the VIX is at this level, or there's a lot of market events like FOMC and all these events that or in reports that we have during the week? How many of those are we going to consider before we change our variable as a stop loss? So all of this really matters, but you can only do it based on your personal experience of your own trading as you document and keep track of your trading. So right now for automation, we're using 25% for swing trades. And that seems to be handling some of the volatility. So we have to keep that in mind. So as I look, and by the way, you have to be able to handle 25% stop loss, right? If not, then you're going to shorten this thing up. And then you're going to notice whether that's working out for you or not. So right now we're going to use a 25%, but we're going to do it as a trail stop. And I wanted to explain this. So a trail stop is really great for if you want to get into a trade and you want to follow the profits up. Your trade is working, let's say. And as your trade's working, your stop loss is right underneath it. And as your trade is working and goes up like this, your stop loss is following it. Now, if we just set a 25% stop loss at the time of entry, then as you're making profits, your stop loss is still down here, right? It starts here, but then as this is going up, it stays down here. And so what ends up happening is a lot of people will look at their account and go, oh my God, my trade's doing really great. And next thing they know, it went all the way down and hit their stop loss. And they're like, oh, I should have took profits. So if you're one of those people that often say, oh, I should have took profits, then this is a great way that you can do that. And then also keep in mind your risk, right? So as the price is moving up, if you have that 25% stop loss, it's just going to move up with you. It actually trails your position. And this is really good too, by the way, for stop hunting. I don't know if you've heard about stop hunting, but that's where the institutions see where a whole bunch of orders are at to create liquidity. They'll go and tag those orders. They'll make price because they have so much money. They can drive price down as an example, or drive price up as an example, take out all those orders to create liquidity. And so if you've heard about this manipulation in the market, it's true. However, a trail stop, they cannot see your standing stop loss order, which is really cool because it's dynamic, isn't it? And so this is one of the ways, if you feel like you've been manipulated and you keep getting your stop hit when you create it, then what you could do is use a trail stop because it's dynamic and it's following price. It can't be seen. And so this is really a cool thing too, as well, if you're worried about those types of things. So here now we have a trail stop. We have our put now set for the downside. So let's take a look at the order confirmation form just to make sure we got it right. At or below 568.80. That's when we're going to get into this put. And we're going to sell that QQQ put when it hits a 25% trail stop. And now we're going to go ahead and submit that. That one is going to be waiting in the wings. So now what did we just do here? We did a little bit of analysis on some consolidation because that's where price is right now, is consolidation. And instead of watching your screen all day long, waiting for a reversion to the mean trade or waiting for the breakout, you can now just automate your trades, set it and forget it. If you're interested in learning more, we created a masterclass and a system that you can actually follow step by step. And it's not very long. I'm not going to drown you with 2,500 hours of training. It's relatively, you could get this done in a day and start automating your trades this weekend. That's how awesome it is. We give a 30-day money-back guarantee. We also give weekly training sessions, 1 hour. In fact, our last session was an hour and a half long. Every Wednesday at 12 noon, we jump right in and start answering questions. We go over a little less in trading. And so it really is a great community. I hope you'll check it out, tradingmadesimple.org /autopilot. All right, we got a couple more minutes. Let's take a look. I'm glad we got into a big automation. lesson today. I was actually going to look at what was moving today. Let's get over to Discord and see what we have there. So I was looking at top flow. Guys, if you don't use any type of option flow, it really is nice to be able to see the whale conviction, where is gamma and jacks. That's the market maker identifying where support and resistance is based on the money that they're taking in, like the bookie theory here. And so these types of tools really help a retail trader today. I don't know if you're using any tools, but reach out to me if you have any questions on the types of tools that are being used today by the retail trader. It can really help you. And so here's one of them, right? So here is a top bullish and bearish flow. This can just give you an idea what's moving in the positive direction, what's moving in the negative direction. BABA looks interesting to me. I've seen a lot of orders coming into different whale option flow alerts, and you can see it's number 2 on the list. I typically will take the top 3 on each one of these and use it as a watch list. Couldn't you do that if you were doing like as a day trade, as an example? So gold, BABA, and IWM, looking for bullish trades there. Nevada, SPY, and Affirm for the downside. And you can see the bar is actually as a representation of really like how much flow, how much money is going into these positions. So that's why I say the top 3 safe here, or even maybe the top 2, because if you took the top 2 on the bull side, top 2 for the bear side, right? You got 4 tickers. That's enough, guys. You don't need a whole lot of tickers to make some money in the marketplace. So here we got gold and BABA and NVIDIA and SPY. Let's take a look at that really quick. So we got gold. Ooh, looking good. By the way, on a 15-minute, we just popped up above a trend line here. You could see that our last pivot high on a 15, boy, we just banged right through, didn't we? And then look at the top here of our pre-market low. Pre-market low, mid, and high. You can see that we broke out. As soon as we break out of that pre-market level, we are trending. You could see it's coming back into a range though. So be careful here. If it comes back into a range, where could it go? Its last resist, first of all, it's the 20. Next is the pivot high here. Last pivot high is that green little level at 315. So this could go down a couple bucks if we have a little change. If it stays above this level, in fact, this is a nice retest here. I actually like this as a long. So take a look at gold, guys, if you need some trade ideas. All right, looks like it's that time. I will see you next week